Hi, Beth Riebenstorff with our September 2021 real estate market update for the Phoenix metro area. Noteworthy news is the drop in pending home sales. You've likely seen that on the news the last couple of weeks. Our clients certainly have. And this is a look at pending home sales going all the way back to 2012. And we see the dip going down during the lockdown in January 2020. And then it comes back up with a lot of activity, lots of home sales in the summer of last year. And then we have this drop, that little red bar to the far right, which is still well ahead of historical levels, but it's off the highs that we saw in the summer of last year. And the dotted white line, well, that shows what a healthy market looks like. Still a very, very good market for sellers, but a definite drop in pending home sales, signaling some signs of softening, which could be very good news for buyers. We can see some similar potential softening in the data from the showing time index, and that collects the data for all the home showings. The two red bars show the dip in March, April, and May of 2020 during the lockdown. And then it shows an increase during the summer, followed by a really significant uptick in January, February, March. And then, and beginning in April, there's clearly a drop from 280.7 down to the most recent reading in July at 189.4, which is very close to last summer, which was hovering around 200 or 199. 2020 was such an unusual year. So it's helpful to look at July of 2019, which was sitting at 123, compared to July of 2021 at 189. Well ahead of July 2019, but also clearly cooling off a bit. Here's a look at the homes that sold for more than the initial list price in July of 2021. 49.6% of all homes sold for more than the initial list price. That's down from 54.4% in June of 2021, and it's well above the 26.8 in July of 2020. So, one out of every two homes sold for over list price, which is still a very, very robust market. But that drop from 54.4 to 49.6 might be the start to a cooling off. Here's a view of new monthly listing counts, and we can see in 2017, 18, and 19 the historical seasonal activity where sometime around May there's a peak in new listings coming to the market. Then it starts to go down and dips in October, November, December. The orange bar shows what happened in 2020. It started with a normal pace and then dropped during the lockdown. Folks pulled listings from the market, and then once the lockdown was lifted, new listings were brought back to the market. If you're a buyer, that 2021 green line, well, that's showing some promise. It was a slow start when listings started coming back to the market last year, slower than the starts in 17, 18, and 19. And that has contributed to the current buyer competition. But 2021 levels are continuing to climb, which may be a very encouraging sign to buyers during the time of year that we typically see low inventory levels. If new listings start to fall, then we'll see more upward pressure on prices. And if those listings continue to climb and get in line with what we've seen in previous years, then we should see less price pressure, which would impact the competitive offers and the price appreciation. The issue in our current market is a seller issue, not a buyer issue. So if sellers bring more inventory back to the market, then the pent up buyer demand that begins to ease. So let's take a look at some affordability factors next, starting with the monthly mortgage payment. Back in April 2020, we can see those orange bars. It was somewhat steady. And then in March, April, May, and June, the monthly mortgage payment begins to rise. This is the other side of home appreciation. Increasing appreciation means a decrease in affordability. But what does that actually mean for a buyer? It means that homes may not be as affordable as they were when distressed properties dominated the market, but they are much more affordable today than they were at any point prior to the housing crisis. Looking at rents, things become very interesting and a concern for renters that might be sitting on the sidelines. This chart shows the median asking rent going all the way back to 1988. We can see the climb and then a skyrocketing increase in the most recent years, and that pretty much tells the story. Renters often mistakenly think that they can't afford to buy, and they remain at the mercy of increasing rents when purchasing will likely give them a fixed protected payment. So, as rents have increased, so has the percentage of income needed for a mortgage payment. Again, what does that actually mean? Freddie Mac, in their essential guide to creating a home buying budget, says Most lenders agree that you should spend no more than 28% of your gross monthly income on a mortgage payment, and that includes principal, interest, tax, and insurance. So they're saying 28% of monthly income can go to the home buying budget and still be in the affordable range. NAR says the 25% mortgage payment to income share takes into consideration that a homeowner has other expenses, such as property insurance, taxes, utility, and maintenance. So that total housing expenses are no more than 30% of income. In this graph, the green bar shows that today an average of 17.1% of monthly income is going to a mortgage payment, and that's below the historical average of 21.2% and far below the NAR guideline of 25%. So it's true that it's not as affordable as it was in past markets to buy a home, but it does not mean that it's unaffordable. Homes are less affordable, but not unaffordable. So let's break down a few things in today's market. First up is mortgage rates. Well, great mortgage rates, they're one of the factors that have fueled the demand in the past year. Looking at the rates by decade, historically, interest rates in the sixes, well, they were normal. And rates in the fours, well, they're low by historical standards. As far back as the 70s or 80s, 8% was not considered a really high rate. And today we sit at 2.87% on the average 30-year fixed. So, very, very good rates. Number two is home price appreciation. Now, according to this Black Knight study, it's showing a 14% home price appreciation. Now, other studies, such as Case Shiller, showed a 17% home appreciation. Historically, average appreciation, as you can see, the dotted orange bar in the middle is running at about 4.1%. So, we are seeing very, very robust appreciation across the country. Well, supply has been a big issue in housing over the last year, and the month supply refers to the number of months it would take for the current inventory of homes on the market to sell given the current sales pace. Historically, a 6-month supply is associated with a moderate price appreciation, and a lower level of months supply tends to push up prices more rapidly. So, a balanced market is typically between 4 and 6 months. Getting back to a balanced market, well, that's dependent on sellers putting their homes on the market. Number four is the number of days that it takes to sell a home. As of July 2021, it takes an average of 17 days to sell a home. Back in March of 2019, it was in the range of 42 to 49 days. So from 6 weeks to less than 3 weeks to sell a home. And number five is the average number of listings and offers. On average, how many offers for each listing? Typically, that's been a couple of offers on an average listing, according to NAR. But currently, it's 4.5 offers on each listing. Now, the peak was 5 per listing in the spring market this year. So, definitely signs of potential cooling to keep an eye on, but far from normal by any definition. For some details and highlights for the local Phoenix metro area, the average year over year price per square foot increase from 2019-20 to 21. In the under 300 price range, it went from 142 to 160 to 187. In the 300 to $600,000 range, it went from 174 to 201 to 232. 600 to a million, it went from 228 to 250 to 274, and over a million went from 421, then 455, and currently this year, 2021, it sits at 566 a square foot. And this shows our local inventory situation. This is the monthly number of active listings for each year. So the monthly number for August in the 3 years of 2019, 20, and 21 by price range. So under 300,000 in 2019, it was 4269. In 2020, that went down to 2180, and in 2021, it's below 1,000, 939. The 300 to 600 went from 5,073 to 3,156 to 3,561. And 600 to a million from 1634 to 1142 to 1375, kind of some good news. And over a million, 1456 to 1264, down to under 1,000 at 878. And finally, a look at active listings, but this time month to month to month. So July, August, and September for 2021. In the under 300, 979 to 985 to 939. The 300 to 600, it went up in August, down in September, 3,700 to 4,273 to 3,561. The 600 to a million, 1189, 1334, and then 1375, a little bit of good news. And over a million from 926 to 938 to 878.